Hello, everyone. You guys were watching today's price action. Market was moving left, right, up, down. Chippity, choppy price action. Disgusting. So in today's video, we're going to take a look at why the market was moving the way that it was. What the next steps are for the... We didn't do bad. We didn't do bad. No. We didn't do bad. But the market, it was moving up, down, left, right. Hello. Disgusting. Disgusting. Did not even... Very not fluid. It was not fluid. It was not flowing like the waves of a sea. You know, there was no fluidity in the market. It was not a beautiful day to trade. It was more calculated up, down, up. Disgusting. So in an instance like that, it becomes a bit more difficult to day trade, right? But thankfully, we did good. We did good. But unfortunately, you know, it was not like a fun day to day trade. So we're going to take a look at that. We're going to figure out why. I'm going to explain to you guys the reason why that occurred. So that in the future, when this happens, you're going to know, okay, today is going to be a chippity choppy day. Today is going to be a day where it's going to chippity chop, okay? I'm going to explain that. We're going to take a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the yields, the large tech stocks. There's some interesting things to talk about there. And we're going to put it all together. And hopefully, we're also going to take a look at what the next steps are for the news coming out this week as well. Lots of important stuff to talk about. Let's get started with the video. All right, starting off, number one, CPI data coming out tomorrow morning, 8:30 a.m. Very important. CPI data. Number two, Wednesday morning, the PPI data, 8:30 a.m. Also, very important to look at that, the PPI data, right? Then at 2 p.m., FOMC. We're gonna have Powell start talking after giving that PPI data this morning, right? So he's gonna talk. We're gonna talk about the CPI. So in general, these next 2 days are gonna be very important. So tomorrow can also be another, unfortunately, could be another chippity choppy day. But we're gonna have to see. But just realize these are the important timings for the next 2 days. All right. Next, let's go ahead and talk about the fact that I am an amazing trader. Even on a disgusting, chippity, choppy day, we took nice, sweet, safe, beautiful, nice, simple trades. The market listened to us. It was a beautiful day. There was never a point where any of these trades that we took, we were down money. The market listened to us. Nice, simple, beautiful. Love you. I love you trades, right? We took longs, boom, it worked out. Market listened to us. It was very nice today. We went short, the market listened to us. Nice and simple. So today, obviously, we didn't pile it on. I would have loved to take a lot of trades, but not every day is going to be a day where we could take a lot of trades. Chippity choppy days like this, nice and safe. There's no reason to lose a lot of money. 2 weeks ago, we had a 92% success rate. Last week, 96% success rate. We took over 50 trades in the past 2 weeks. Today, nice and simple. 2 trades. It is what it is. Okay. I would love to have taken 7, 10, 15 trades, but it's okay. So I'd love to see you guys in the Discord. You guys know already how to get access to it. The link is going to be in the bio. It's going to be in the comments. All that good stuff. Definitely see you guys there soon. All right. You know what? I'm not continuing the rest of the video until everyone watching the video signs up for the Discord. I'll wait. No, I'm just kidding. No. But the thing is, guys, join the Discord. I am a filthy animal. I'm a filthy animal when it comes to trading. Whether you like it or not, I am... I played sports in high school with D1 athletes from college. I was pretty good playing sports in middle school, high school. I was always a I was good at playing video game. Trading? I don't know why God gave me this, but thankfully it's a blessing. Join the Discord, join the community. It helps. And the goal is to make you self-sufficient. The goal is to make you not have to rely on anybody. And hopefully that is what's going to end up happening. All right, so join the Discord. And now, go ahead and start the rest of the video. All right, so number one, what I want to show you guys is this is on stockcharts.com. What I did was I typed in SPX A50R. This is the S&P 500 percentage of stocks above the 50-day moving average. And what this shows, what I'm basically trying to show here is when it gets this number, right? We're at 8640. When we start getting to the upper 80s and the lower 90s, the market ends up rolling over. So time and time again in history, when a large percentage of stocks are above the 50-day moving average in the SPX, we get a pullback. So this upper area right here, this is the SPX. So just look at what happens to the price of the SPX when we get a sharp increase in the 50-day moving average. So right here, back in July, okay, we end up falling. Okay, back over here in December of 2022, we end up falling. Right, back over here in August of 2022, we end up falling. So right now, we're not there just yet. We're getting there. We're getting pretty close. So we're a few points away to getting a nice sharp move to the upside on the percentage of stocks above. And this one ended up turning over around 90. This one ended up turning over at 93, which was the high. And this one turned over at 92.40. So around 90 to 93% of stocks essentially need to be above the 50-day moving average. Then we get a pullback. Right now, it's getting there, but it's still a bit early. One of the interesting things, though, is that every time that this did happen, we had the MACD cross over to the downside. This is the 12.26.9 MACD. Right here, you can see that we just crossed below. And every time in the past when this did happen, the MACD also crossed below over here, all four instances. So, essentially, you know, we just crossed below. Now it's just a matter of seeing how much higher we could go. All right, so that's one little instance that I just want to share with you guys. I thought this was interesting to look at. All right, so basically the most important thing that ended up happening today was that we had a bond auction. So we had the 10-year, that's disgusting. All right, so we had the 10-year auction, basically. So the stocks could test an all-time, this is, okay, anyway. U.S. stocks turned higher Monday trading while Treasury yields and the dollar steadied into a monster week on Wall Street that could test a rally that takes the S&P 500 to within touching distance of its all-time peak. Stocks are holding on to earlier gains heading into the first 90 minutes of trading, supported by a pullback in Treasury yields and only modest higher crude prices. Okay, so basically what this means is generally when we get bond yields and like basically when we get a like a situation where bonds are auctioning, right? In the short term, the yields, the longer term yields do well. So what does that mean? The longer term yields, meaning the 10, the 20, the 30-year yields end up doing better. So what does that do to investors? It means that because large money, they don't really care that much about equity prices in the short term. They want to know what the percentage gain on their notes are going to be long term. And the only way to get that is to see, oh, okay, the 20-year yield is doing pretty well right now. That means that over the next 20 years, the US economy is going to be able to pay me X percentage. So what these buyback auctions essentially do, right, is it increases investor sentiment for longer term yields. Okay. And what that ends up doing is that's actually good for stocks, especially right now in this environment where where interest rates are increasing like this. The fact that the long-term yields are doing well, because usually when interest rates are increasing like this a lot, that's not the best sign for stocks, right? But because these buyback, the bond auction programs are happening, the fact that the long-term yields are getting some love is actually bullish also for equities as well. So what we could end up seeing, because so now generally what I'm basically saying is that when these buyback programs happen, they're generally bullish, especially in this environment right now. They're going to be bullish for the market. I hope that made sense. Just rewatch this. This definitely should have made sense. All right, let me explain what I mean. So the shorter term yields, this is the 2-year yield. Let's take a look at the 5-year. So the 2-year yield and the 5-year yield are not doing as good. Okay? Let's just take a look at the 1-year. So basically the shorter term yields are not doing as good. But then when we look at the longer term yields, the longer term yields are ended up doing much better. Less is 20. Let's take a look at the 30-year yields as well. So the longer term yields are doing better because they are trying to regain long-term investor sentiment in the US economy. In doing so, it ends up being bullish for equities as well. And especially growth stocks, because growth stocks are the largest. It's crazy because usually when yields increase, it should have an inverse relationship, right? But on specific days like this, the relationship ends up being a bit skewed. So it's just because of today essentially. So yeah, growth ended up doing the best because the longer term horizon of a nation, of the United States, is based off of the innovation in tech and innovation. You know what I mean? So that's why the NASDAQ ended up doing the best. And it was a really, really fun day. So that's the first thing. I just wanted to explain that, okay? We're not going to go over the yields. There's that, okay? The next thing, I want to explain why the market was very, very choppy today, okay? All right, guys, this is a chart of the VIX. Jot this down. Very, very important. Very, 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 very important. Jot this down. This morning, the VIX was up almost 6%, okay? And what do we know? The VIX has an inverse relationship to the market. When the VIX is up like this, the market should be down, okay? But what ended up happening? The VIX was up 6%. The SPY was down 0.1%. When that occurs, just chalk it up, write it in your mind. Okay, today's going to be a bit of a choppy day. The reason for that is because the VIX, the volatility increase in the VIX, basically the pop in the VIX is not properly translating into a drop in the market. And when that occurs, it leads to chop. Okay? Very, very simply. So just keep that in mind. That's essentially what ended up happening. All right? Once again, when the VIX is up very dramatically, but the SPY is not down dramatically, understand that the SPY and the market in general is going to be choppy. All right? Hope that makes sense as well. So now I don't want to go too in depth into stock analysis, right? Because there's too much news coming out tomorrow and Wednesday, and all of the analysis can just be undone in a second. So what I will say is there's some interesting things going on with specifically the AI related stocks. So Nvidia took a big dive. AMD had a big rise. So AMD is clearly trading comfortably outside of the upper level of the Bollinger Band. And the most recent time when we saw AMD trading this overextended was back in November of 2022, where we had 3 days in a row where we opened and closed outside of the upper bands. So currently, we only had 2 days. So tomorrow, if we end up opening and closing outside of the upper bands, that could be a good short for, month and a half out on AMD. But definitely things are really overextended on AMD. The other interesting things that I want to show you guys is Microsoft. Got a bit of a pullback on Microsoft. That's fine. But then when you look at Google, Google dropped exactly to where I thought it would end up dropping. It bounced exactly off of the lows here. And we ended up, we opened much lower. We ended up closing a bit more green. Obviously, the rest of the market was also green. But what's interesting is that regardless of all of these large tech stocks dropping like this, the market held up. So that's really, really interesting. And now, it just begs the question. Once these large tech stocks, once Google, once Nvidia, not even to mention Apple. Apple had a pullback as well off of the highs. So once these guys start to rally, Amazon was flat. It was holding support. Meta had a red day also. So Tesla was also a bit flat. And Netflix didn't build the gap, but it didn't close dramatically. But what I'm saying is, once these stocks get a nice, solid, and they start to retest the highs, and they stop consolidating a bit, because even on Netflix right now, this is generally this is a bullish setup. Even though we had a wick, we could come back up and fill this wick. So, to the person that was holding on to Netflix calls over the weekend that was worried, congratulations. This was a really, really good, solid little trade. So what I'm saying though is, once the winners start to do well also, the market could end up pulling itself up. The average percentage of stocks above the SP 500, above the 50-day moving average, could start hitting 90, 92, 93. At that point, historically, that would be an amazing opportunity to short. So hopefully, we're going to get some high-quality trade setups heading in to the end of the year. But right now, nothing new. I'm not doing anything new in terms of swings. I don't want to even, try to trade the swings in terms of like day-to-day price action. All we're doing right now is just holding on to the 2-month outputs that expire basically in January, and we're just gonna hold on to that. If we end up climbing up to 464, 465, 466, that would bring us to a nice little opportunity where I think a larger percentage of stocks would be above the 50. That would also be a better opportunity to add into some shorts. And also, the NASDAQ is starting to get a bit overextended outside of the upper band. So let's see if these next few days, especially with news, if we get a nice, solid move to the upside. All right. So overall, we had a really, really good day. We're going to have an amazing rest of the month. Do not overtrade. Do not over leverage yourself to the opposite direction. Bulls are currently in charge, right? But it's not going to be for that long, in my opinion. And just keep that in mind. But it's always good to add some time to your position. And because you won't have to deal with the day-to-day stress of, oh my God, I need this to work tomorrow. Why are they playing around? Why are the market makers doing this? As you can see today, the VIX was up 6%. The market didn't do anything. Generally, this is a really, really good indicator that when the VIX is up like this, the market should be down. But on days like this, they can control everything and consolidate it for as long as they want. So that's why it's important to always keep your position covered and safe. All right. So I hope you guys have a wonderful rest of your day. Love you guys. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.